hey everybody, it's Luther Wilson III. Today is Monday, September 30th, 2024. It's almost fourth quarter, baby. All right, so if you've been tuning in, you already know I'm a real estate extraordinaire here in the Kansas City market, doing a lot of sales and investing. My background's in property management. And today's video, I want to talk about private lending and private capital for real estate investors. Okay, so as I mentioned, my background's in property management and sales of real estate, real property, and I've worked closely with investors for over a decade. And I myself am an investor too. And it's been my goal and our goal to not only acquire property, being able to renovate them, maintain them, and with the intention to keep them for a long period of time so that they can produce cash flow. And so a big part of that is the financing piece. And I know for me, it wasn't something that I really dug into a whole lot until the last couple years. And we focused primarily on acquisitions, finding deals, and then figuring out how we can capitalize on them, whether we keep them or not. And unfortunately, when we do it that way, a lot of them we end up having to sell or we can't keep. And if we were to get a handle on the financing, the private capital, the private equity, if that includes private lending for a lot of us, then it'll help us so much more, okay? So when it comes to private lending, there's a lot of services, there's a lot of professionals and outfits that are available that promote their funding, okay? And you know, when I think of private lending, I think of an individual. It could be a friend or a family member, associate, or business partner, but you can also think of a company. There's smaller companies that offer financing, all right? And is it truly private? I mean, depending on how you look at it, you may not really consider it private, okay? If it's an institution or a fund or a small group and it's hard money loans or terms and costs like hard money, you know, you gotta dive into that, okay? So this is part of my mission as I've gone through the process of the deal finding, the property management, the renovation, and so forth. I have come across so many investors that it doesn't even get brought up until we need it, right? We find a deal and we want to keep it and hold it, then we go figure out the capital piece, all right? We find a deal, we find what we think is a private lender to fund it, and it ends up being a hard money loan, and we have 6 to 12 months to get through that renovation and resell, or we gotta rehab it and refinance in order to keep it. And a lot of times we may not think about how we can make that happen until we're already in it. We're already, you know, it's funded, we bought the property, you know, we're going through the rehab, and there's nothing wrong with short-term debt, right? I mean, we definitely prefer long-term debt, but if we're going to use short-term debt or hard money loans, it's critical to understand what are the terms of its usage, how much it's gonna cost, and so forth. Because look, especially in today's market, things are different, all right? In the end of 2024, for a lot of people, a lot of real estate professionals and investors, transaction volume has gone down. For those, you know, who are still moving and grooving pretty heavy, we know for sure that the numbers have changed. The targets that we were able to hit a couple years ago, 6 months ago, 5 years ago, is different. So as you are exploring, if you're tuning into this video, then I'd imagine that you are wanting to do some type of real estate investing. You're already involved in it, or you might be a practitioner. And if you refer back to some of my previous videos where I talk about private equity, the gap funds, the investor financing, being able to get a handle on that is huge, right? You get the capital straight, you get the, you know, your strategy or investment model that you're going to deploy, and then you got the operations as part of that. Those are three. I did a video and some social media posts about that the other day. And so explore all of that. It's so key. If you want to grow a portfolio, all right, the turn and burn, the quick transactions, the short-term funding it can be very, very good. But a lot of those, because it's short-term funding, we gotta get out of them pretty quickly. And so we put a lot of pressure on ourselves as we're going through the process and not really thinking like, oh my God, like, even though we found a really good deal, the lender funded all of it, right? The purchase and part of the rehab, or maybe all the rehab, but they a lot of times aren't going to give you that all at once. So those gap funds are absolutely critical. So I wanted to talk about joint venture partnerships when it comes to private lending, because that's where my clients and I have seen the absolute best success in the form of a JV partnership or forming some type of entity, all right? For us, our goal is always been to keep most of these properties for the long run so that they produce cash flow. Well, the cool thing about it with the private lending, okay, and joint venture partnerships is capital investors can put that money behind an operator. They can loan money to another investor. They can loan money to a construction company or a contractor that specializes in renovating and reselling or just rehabbing properties in general, okay? So for investors who have capital and they want to place it, what me and a couple of my partners and a bunch of my associates have done is we've done not just the private lending aspect where we borrow money from individuals, okay, but we also can use that capital and form an entity, an LLC with that capital investor. So if you're in that position and you have capital and you want to place it, you have to kind of decide, okay, if it's going to be passive, am I just going to be the lender or backer on it? What does that look like? Am I willing to go long term? Do I want to just invest it for the short run and have it placed for 6 to 12 months, maybe longer? And if I do place that on a short-term basis and I place it with someone that's doing renovation projects, you got to understand that that's the riskiest thing that we could do in real estate. That's probably the riskiest thing you could do with your capital, is to invest it for the short term, especially when you're combining all the different things, the whole process. It's very, very challenging. So there's other ways to invest or place capital, and the JV partnership is great because not only can you do it more passively, but if you're in on the deal and you are part owner of that entity, part owner of that property, then you get to enjoy a lot more of the long-term benefits, the tax benefits, the cash flow, and so forth, if it's done effectively and managed well and so forth. All right, so in the Kansas City area, most everything that I do is B-class single-family homes, buy and hold, long-term, offering home ownership in the form of some type of seller finance transaction to produce cash flow. One of the best ways, that's where we've had the absolute best success with our backers, with our investors, with our clients, and so forth. And so, of course, we're going to be biased. Of course, we're going to lean toward doing that. But if you're looking at placing capital passively, you know, there's larger ways, larger deals, syndications, multifamily, and so forth that you can do that on. However, it's structured a little bit different. Doing the one-on-one or two-on-one where you're with a small group and you are putting that capital behind a seasoned operator, again, or a contractor or an investor, then it's more intimate. There are some additional risks that are part of that too. However, if it's done effectively, kind of alluding to that earlier, buy and hold long term, then the risks are way down. So that's a key point. Explore how you can place capital behind real estate behind real estate. If you want to be a backer, if you want to be a partner, if you just want to be the lender, there's ways that you can structure it, all right? So Again, we're pushing for long-term, safe, secure investments. If that sounds good to you, then give me a ring, hit me up, subscribe to the YouTube channel, show some love, give me some likes, follow me on YouTube, as well as the various social media platforms. My handle on YouTube is the same handle on my Instagram. It's Luther3RE. All right, and tune in. Until next time. Peace, y'all.